Hey guys, welcome back to another video. So as I promised on Friday, it's Friday, so it's time for another market update where we take a look at what is happening and how the market has changed week over week, what is happening with those rates, those volumes, those diesel prices, how are ELP out of service orders doing, what is happening on that front, and we try to see whether the market is changing for the better, for the worse, or staying the same. So let's chat about it. Ready? Let's go. All right, so as always, we're going to start with the net change in carrier population. All the charts are going to be right here. After a pretty significant drop that we saw last week, the net change in carrier population was positive this time around, a net increase of 369 carriers. Why is that? Well, if you look at the red line, which shows total gained, you will see that it kind of shot up. So more people over the past week came into the industry, opened up their own authority, which is why there was a net increase. All right, what about those ELP out of service orders? A little bit of a different chart this week, simply because the FMCSA data was lagging, so I had to use other sources. As you can see, so these are just out of service orders by month. September by far had the most out of service orders. November is currently at 1,263 out of service orders for English language proficiency. And for the month of November, we can take a look at where those happen. So most of them, as you can see, happen in Texas. 124 of them in the month of November happened in Texas, followed by Arkansas, 117. Now, Florida is at 70, Wyoming at 59, Arizona 56, Pennsylvania 57. California is at 0. No surprise there. All right, let's take a look at what's happening to those diesel prices. And for the first time in a couple of weeks, we see that diesel prices went down week over week, at least by 2.4 cents per gallon. But month over month, there is still almost 11 cents per gallon higher and almost 22 cents higher year over year. So diesel prices are really eating away at that net profit at the moment, unfortunately. Now, if we take a look at the price at the pump, this is last week, this is this week. So it did get lighter in some areas. The most expensive is still California, $5.14 per gallon, followed by Washington, $4.93 per gallon. It seems like the cheapest is actually in Texas, $3.26 per gallon. Now, if we look at it without IFTA, removing IFTA from the calculation, this is last week. This is this week, also got lighter in some areas, but it seems like in the Pacific Northwest, it did get a little bit darker. So the most expensive, if we remove IFTA from the calculation, is Washington, $4.35, followed by Oregon, $4.33 per gallon. All right, now let's take a look at what is happening to those rates as of last week. Right away, I'm going to tell you that reefers kind of started sliding up. The average is $2.58. Flatbeds also went up just slightly, $2.30 on average, and so did dry vans, $1.99 on average on the spot market. If we take a look at the overview, and again, a reminder, this does not tell us anything other than information, doesn't tell us where the best places are at the moment. This is just information. The best places we'll get into in just a moment. Let's start with dry vans. So the highest recorded average rate per mile came out of Delaware, $3.05. The lowest is North Dakota, $1.09. Highest volume was from Texas. Lowest volume was from Rhode Island. And if you take a look across, you'll see that Rhode Island is the lowest volume for all three equipment types. And the most versatile for dry vans was Texas, meaning that there are more loads relative to the rest of the market, and they go to more regions. For reefers, the highest recorded average rate per mile on the spot market was South Carolina, $4.37. The lowest was Delaware, $1.20. Highest volume was Texas, lowest Rhode Island, and the most versatile state was California. And finally, we have flatbeds. For flatbeds, interesting enough, the highest recorded average rate per mile was from Kansas, $4.77, and the lowest, not surprising, was Maine, $1.15. Alabama is back as the highest volume state. For a few weeks, we saw Texas as the highest volume state. Rhode Island is the lowest volume, and Alabama is the most versatile. Okay, so now let's take a look at loads versus trucks for the three main equipment types, and we're going to start with reefers. So again, loads mostly come out of California, Texas, Illinois, followed by Georgia, and interesting enough, Wisconsin is here as well, Ohio, Pennsylvania. Trucks mostly go to Texas and California. In terms of the rate per mile map, a lot of gray area, a lot of places might have had loads just without any posted rates, so it wasn't possible to average those out. Let's take a look at the most versatile state, which was California for reefers. As you can see, there were loads going to each of the regions. The average rate per mile was $2.42. The lowest was going to the Midwest, $1.89, and the highest rate per mile was going within the West Coast, right? Arizona, Idaho, Nevada, Utah, $3.25 per mile. All right, now it's time to try and figure out the better areas and see how the market has changed week over week. As you can see, 4 out of the 5 regions saw an increase in the average rate per mile posted on the spot market, except for the West Coast. The West Coast actually went down. In terms of load volumes decreased across the board. And in terms of where the better place to be is, I would argue that considering you always have to take into account not just the average rate per mile, but also the load volume. This doesn't really change. Every week I say the same thing. It seems like reefers are still better off if they're in the Midwest because the average rate per mile recorded from this week was $3.18, and the load volume is the highest relative to the rest of the market. Okay, let's take a look at what's happening with dry vans. Loads mostly come out of Texas, California, Illinois, basically the Midwest, Pennsylvania, and Georgia. And trucks mostly go to Texas, followed by California and some of the South and Midwest. In terms of the rate per mile, pretty much the whole map had posted rates. And the most versatile for dry vans was Texas. So let's take a look. It might have been the most versatile, but the rate per mile is not that great, right? $1.83. The lowest rate per mile was going to the Northeast, 96 cents per mile. And yes, when I look and calculate the average rate per mile, I only look at full truckloads. The highest rate per mile was going to the South, Alabama, Florida, Georgia, Mississippi, and so on and so forth. Just to see what's happening, let's take a look at what's happening with Illinois for those dry vans. Even though there are loads going to each area and the rate per mile is significantly higher than Texas, it is not the most versatile. There are way less loads than in Texas, but yeah, the rate per mile is much better, $2.54, with the highest going back to the Midwest, so shorter miles, and the lowest going to the West Coast. All right, let's take a look at the dry van overview. And as you can see, 3 out of the 5 regions saw an increase in the average rate per mile, including the Midwest, and only one region saw an increase in the volume. Best place to be for dry vans is, of course, the Midwest. It is the highest rate per mile on average, and it is the highest load volume as well. And this also doesn't change week over week. At least I haven't seen it yet. All right, let's take a look at those flatbeds. So in terms of loads, most of the loads come out of Alabama, followed by Texas. But the trucks mostly go to Texas. As you can see, Texas just sticks out here. So most of the loads do go to Texas. Let's take a look at the rate per mile map. Yep, New Mexico is missing. Some of the Northeast is missing. There were no posted rates there, but Alabama was actually the most versatile state. So let's take a look at what's happening with Alabama. Average rate per mile, $2.19, with the highest going to the South. Yeah, Alabama to Alabama, Alabama to Florida. So shorter miles, $2.64 on average. The lowest was going to the West Coast, $1.61. In terms of Kansas, I mean, I know it sticks out here. Kansas is pretty dark, which means the rate per mile is higher. But if you take a look, it's only because there were maybe one or two loads going to the Midwest, very, very short miles, and one or two loads going to the Plain States. All right, let's take a look at the overview. And according to the overview, 3 out of the 5 regions saw an increase in the average rate per mile for flatbeds, and 1, the southern region, saw an increase in the volume. For flatbeds, it also doesn't change. Even though the highest rate per mile on average is from the Midwest, I would say that the southern states are still the place to be, specifically Alabama and Mississippi. You will also see that the lowest rate from the southern states is to the West Coast, and you'll see that it's still higher than the lowest rate from any other region. So this week, just from personal experience, because there's always data and then there's the experience and the feeling in the market, this week I can say that the feeling in the market is very similar to the one that was last week. It's not as bad as about 2.5 weeks ago. But still, loads are flying off the load board. It seems like I said, even though the capacity does seem to decrease, volumes are clearly decreasing as well. You can see it in the data. You can see it in Sonar if you have a subscription. Volumes, as I said, the long haul volumes are down 30% year over year. And when that happens and capacity doesn't decrease fast enough, you still are competing with other trucks. And that's exactly what I have been seeing this past week, is that a load comes out, it flies off the board. In terms of negotiations, I haven't seen much of a difference week over week. I feel like, yeah, most brokers are willing to negotiate about $100 to $200 more, depending on the load. Even if it's a load that they have a hard time selling, they're not really willing to negotiate more than $100 or $200. And I believe that the reason for this is because brokers, when they were bidding on this freight, they were assuming that the market is going to stay depressed and they're not willing to pay out of pocket, nor are they willing to go back to their customer to ask for more money. But I'm curious to hear what you have been seeing this week. I know this week was a little bit more challenging in terms of booking loads, simply because it is a Thanksgiving holiday week, which means that a lot of people were panic booking on Wednesday. A lot of shippers closed down early on Wednesday, at least for flatbeds. A lot of them were working half day. So it was definitely an interesting week. Anytime there's a holiday week, me personally, I start getting heart palpitations because I understand it's a short week. It's also the end of the month this time, which means that, yeah, the gross income definitely suffered this month, but it is what it is. And again, I'm very curious to hear what you guys thought about this past week. I'm very curious to hear how reefers are doing, because I'm getting a lot of comments saying that reefers are doing well, and I can see the rates are increasing. However, I also can see that the markets are scarce. So how are you doing if you have a reefer? After all, this is the time where those last minute shipments go out. Dry vans as well. Anyway, wishing you all a fantastic rest of your week. If you're doing some Black Friday shopping today, good luck, especially if you're doing it in person. But other than that, wishing you an amazing weekend. See you guys in the next video.